Good day, everyone. Okay, so I just want to go over the charts real quickly. And I want to talk about a premise that I think is really important, which should be that your primary goal as a trader when you're entering a position is to get into profitable positions. So that's positions where you can take meaningful profits off the table and set your stop loss to entry and then let whatever happens happens. It doesn't need to be and probably shouldn't be that you're always trying to trade the top to the bottom or the bottom to the top. You're just trying to get into a position that has a high probability chance of getting you into profit that's meaningful. So I took this initial short off this liquidity grab into this ascending channel idea. And I took profits at the first sign of strength. So I just said, as we were breaking down here, if we get any strength coming in here, my primary take profit is point of control. But if we get any strength, I'm just going to take a quick TP1, and I've already set my stop loss to entry. And then we got this push up, and we had the 786 here. So first we move into this golden pocket, but ultimately taking the liquidity above these highs. Then we get this another rally into the 786. And again, I shorted that and actually added to my short on this swing failure here. We had a big bullish divergence in cumulative volume delta here. There's a lot of absorption. So even here I said, hey, keep an eye out for a move up here because we just had heavy shorts get absorbed. So we squeezed out those shorts. We have this other rejection. And again, just taking meaningful profits off the table. When you're trading these key levels, you get a 2% move, 3% move. Lock in some profits, put your stop loss to entry. It doesn't need to be the top. And again, we pushed up this morning into the 886. And right here, and I'll show this in a second, we had a golden pocket retracement from this dip, and we had a big bearish divergence forming there. So I entered short again. And again, just lock in profits. If you start, whether you're expecting much lower or you see some consolidation, you start seeing signs of strength, just take some profits and set your stop loss to entry. Now you can, you're looking, this is my perspective anyways, I'm looking for a short up here that I can hold lower, but I'm not necessarily expecting every short to be the top, but I am expecting a high chance that I can get out with some profits in the position and maybe carry it lower. So I've made videos on this about managing your expectations through the life of your position. And your initial mindset should be, even if you see a really nice rejection, you're happy to get out with some profits. And then you can start targeting some lower targets. But anyway, so this has been quite nice where you have nice rejection from this key level, nice rejection from this key level, even a swing failure. You can lock in some profits. Then we push up again to the 886. We're obviously still in this ascending channel. And you also have bearish divergences forming, which kind of increase the odds of this position playing out. So if we zoom in here, this is where I took the short. And I'm going to go over to order flow here just to show that bearish divergence and to show the divergences that we're even getting here. And these divergences just speak to bigger traders absorbing this buying pressure. So let me hop over to this chart here. I have it way zoomed in for some reason. How do I zoom this out? Let's see. This should work. Okay, so this is the short I was referring to here, where we can see, let's go to the 5-minute chart just so it's a little bit more distinct. I'll have to redraw these lines. So we make this initial high here, and then we have the rejection, and then on the retracements, we're putting in this bearish divergence. So this means CVD is making higher highs, price is making lower highs, speaking to this aggressive buying pressure being absorbed. That means big traders are sitting here with limit orders, absorbing this buying pressure. It doesn't always mean that you'll get a rejection, but it puts the odds in your favor because you know that big traders, for whatever reason, are holding down price, right? Typically to push price lower. And we'll go over some of the high time frame bearish divergences as well. But so here we're retracing into a local golden pocket. So that's just both from your local high to your local low. And again, as we push up, we're still forming these bearish divergences. So again, price is making a lower high, even from here. And CVD is making higher highs. So we just, all this tells us, doesn't tell us that we will reject it, just says, hey, big traders are here absorbing this selling pressure on low time frames. So the most likely outcome would be another rejection. Doesn't mean you will get one. But then I'll go to the higher time frame chart here. Let's go to the 30-minute chart. And we can see that even on high time frames, we have this absorption and these bearish divergences, which these can take a little bit longer to play out, but we're making lower highs in price, and we're seeing signs of absorption in this aggressive buying pressure as we come up, and just constant bearish divergences. So they don't always play out, but even when you're getting them on low time frames, on high time frames, all this tells you is that all of this buying pressure, price should be, if there wasn't big traders absorbing all of this buying pressure, price should be going higher. But there's big traders sitting here absorbing all this selling pressure, and typically the reason they would do that, if they have the ability to hold price down, is they're filling short positions with the intention of driving price lower. But again, these don't always play out, but they do put the probabilities in your favor. So, for example, would I ever long into this resistance with big bearish divergences forming? Absolutely not. This is where you'd be looking for shorts, but you still, even though you have the bearish divergences forming on low time frames, on high time frames, you still want to be taking profits off of your positions, because price can keep pushing higher into this liquidity. There's lots of people interested in longing here, and as long as, even if this is ultimately where we reject, as long as there's people interested, typically the market makers are going to let them keep buying into this resistance. Not to say it can't break, but just to say that there's an incentive to let all this liquidity come into these potential big short positions until finally it exhausts, and then we see a rejection. I don't know what's going to happen. That's just where I'm putting my money in a sense. So yeah, that's how I'm looking at Bitcoin right now. Is, you know, probably a week ago when we were up here, I said I'm not calling the top, but I could see something like this, where we have a rejection. Maybe we put in some kind of flat correction. You know, these, again, the reason I'm trading these different levels but taking profits is these corrections. Sorry for the messy chart. They can come in at different key levels, right? From a technical perspective, it could reject from here. It could reject from the 786, the 886. It could even push up through these highs, and we could still have the rejection. So I'm using risk management. I'm still being pragmatic about taking my first take profit, and that means closing between 30 to 50% of my position, let's say, depending on the level, because I know that yes, we could reject from here, but there's a lot of key levels above that we could very well tap. So yeah, it's reasonable to be taking profits on these positions. And the great thing about taking profits is you take profits, and then you're in a winning position. You can compound your position, or reopen it higher, take profits, reopen it higher. And even here, if you're taking profits, you can, if you see bearish divergences here, you can be adding to your position. So it's just kind of this idea of, you're not anticipating the market to necessarily just make a high and go straight down. You're anticipating some of this, taking profits, being able to add to your position if it makes sense, right? And if you do just drop straight down and you took profits, oh well, you know, great. You're in a short, you have some profits off of it, and now the bottom's dropping out, and you have a great position. And not to get in that mindset of feeling like you've made a bad decision taking profits off a winning position. Because what does that do? You know, people get confused and they're like, well, if there's targets down here, why am I taking profits? Well, now, had you not taken profits, you're potentially turning multiple winning positions into losing positions. Or if your stop was always above the highs, you're not capitalizing on this, you know, ranging choppy price action here, where you can get some profits compound, get some profits compound. It typically makes sense, if you look at price action, to take some profits, because price likes to come up, retest the highs, wick through the highs, you know, like here, get a drop, come back through the highs. It does happen, but you don't just get straight down moves all the time like we did here. And even here you had some retests, but the idea is to start building a short position, but part of your risk management is to be taking profits off the table, reducing your risk. But yeah, what am I expecting? Well, I just pointed out in the group that, you know, we're getting this retracement. We have bearish divergences. It doesn't mean that we can't push higher. It just means we know for a fact that there's big traders absorbing this buying pressure. So what's the most likely outcome? Another rejection. And if we start seeing bullish divergences coming in at key support levels, well, the most likely outcome is a rally, right? If maybe we do finally make it down to some of these lower targets. But yeah, to me, this still looks corrective. And unfortunately, just with the nature of corrective waves, we could push higher and it could still be a corrective wave, which is why, do I have to be sad that I shorted here and the price went higher? No, if I took profits, I don't really lose anything, right? And I could still carry my longs from the lows. And I'm just looking to find nice short positions at all of these key levels. And again, if price pushes higher, do I care? No, because I'm already in a profitable position again. And so I'm getting nice shorts, and I still have the ability to short higher if price pushes higher and we swing failure with these highs, etc. So, it's just about staying calm, pragmatic, looking for those nice entries where you're likely to get a nice rejection. When you're entering here and you get that, or you're entering here and you get that, those put you into profitable positions. Whereas if you're trying to short every breakdown, you're just taking loss after loss after loss, versus shorting every rally, you're profitable position, profitable position. And that's why I like shorting resistance and not shorting these breakdowns, because they like to fake out, price likes to range, and it's just a great way to get wrecked. Okay, hope you guys are having a good day. We're still at major resistance, still looking for shorts because of all these bearish divergences and that Elliott wave idea I shared before, where we're in some sort of corrective phase. Talk to you guys later.